Bitcoin makes a new all-time high, but then stalls as tariff threats against the EU and bond market turbulence temper the euphoria. Policymakers hint at measures to control long-end yields, which keeps crypto traders optimistic that liquidity might be coming, causing some traders to pile back into short-dated upside. Call skew remains firm, but implied vols are still quite muted and may be offering good value to capture the next big move. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT, and today's special guest is Pedro Birmann, co-founder and CEO at Quadra. Welcome, bud.
Thank you very much. It's a pleasure to be here.
Welcome. It's been a while. We wanted to get you on for a while.
Oh, yeah. So. Look, I'm a huge fan of this podcast. It's one of the best, right?
You're too kind.
So I'm super excited to be here.
It's great to get you on, man. I mean, I've known you for a few years, right? Since you kicked off Quadra, which you can tell us all about very soon. But before that, all-time highs.
All-time highs. Again, how many times are we going to say that?
I know, it's true. We just say it quite regularly.
Yeah. Joe, what really excites me, like all-time highs, I mean, like the dynamic's been playing out that way, but I think what's underpinning it is what's really interesting for me. Because I just think there's still this really, super positive dynamic that's underpinning it. And we spoke last week about the bond market, and everything is leading to financial repression, yield curve control, and explosion of liquidity because of this unsustainable sort of fiat system that we've got. And we kind of, again, these things are a problem when they're a problem, and they've become a problem again, which is like, for me, the ultimate bull case for Bitcoin and crypto. But, last week, I think, we had a really weak 20-year US auction.
Yeah, market got spooked on
and that followed actually a really weak Japanese 20-year auction as well. So yields were kind of spiking before sort of Trump come in, created this big risk off. But the interesting thing is the reaction. Again, it's like just picking up for... just what's going on, beneath the surface. You had Besant come out and say, as all these yields are spiking, we expect we'll ease the supplementary leverage ratio in the summer, which essentially reduces the capital requirement for holding treasuries, which is going to encourage banks to go and hold treasuries and keep treasury yields capped. You had the Japanese Ministry of Finance today come out and say that they're going to essentially taper the issuance of super long bond issuance. So they're going to issue less long end bonds and come back and issue more at the front end. Again, kind of a form of yield curve control. And you've even in the UK, you've had the Debt Management Office say out in the Financial Times today saying that they're going to do the same thing. They're going to look to fund borrowing in the short end of the curve to kind of take some of the weight off that's going on in the back end. So we've got, again, this unsustainable kind of debt dynamic. It's not a doomer kind of view on my part, because essentially the central banks and the treasuries, they'll do all these tricks of...
They just won't let the long end go.
They won't let it go. And be it through some sort of yield curve control, some sort of monetary operation, they'll kind of keep those things in check. But what it does mean is, again, it's that financial repression, yields are being kept artificially low, debased currency. Yeah. Bitcoin flies. All hard assets fly. Gold's going to record highs. Bitcoin goes to record highs, but Bitcoin just outperforms everything. And then also the two other points: China are still injecting a shit ton of liquidity. They did a 7-day reverse repo yesterday. That's going to inject like another $35 billion worth into the market. They're, if you remember a while back, they did the 0.5% reserve ratio cut. That kicked in on the 15th of May. That's set to release $1 trillion yuan's worth of liquidity into the market. A lot of liquidity pumping in. you've got this kind of financial repression going on or about to go on and occur, which I think Bitcoin is kind of sniffing out. And then you still got this dollar weakness, which I think seems a little bit, spidey senses, almost feels like some sort of deal has been done on the dollar. Certainly if dollar CNH is back below 720, despite the fact that China are kind of easing policy. And then that weaker dollar, the dollar is the lubricant for global trade, financial conditions, for everything. So that is allowing and facilitating this kind of wave of liquidity that's coming to the market. So I think there's real fundamental
and then you've got Sailor buying still,
and Sailor's buying,
and then he's got all his mates to buy it now.
All his mates are coming in, others are doing it. So I think we hit record highs. We were saying earlier, right, as well. The encouraging thing is we're not just flying and seeing FOMO. I mean, even funding rates are still relatively muted, so we're not seeing signs of FOMO. Retail kind of storming in, so it just feels quite orderly. And we keep having these little highs, and then we kind of consolidate. Little bits of leverage get flushed out, and then we can ready to make the next step. So
I have to say,
it all looks good.
It feels very healthy. That the way that it's not going parabolic and like just going crazy to the upside like we're used to seeing, and then you get these sharp crashes. The fact that it's so orderly does feel quite healthy. But anyway, Pedro, on to you. So tell us a bit about Quadra. What are you guys doing over there?
Sure. I think that we are trying to prepare for the next wave of institutional adoption, right? And one of the challenges that many firms have when they enter the space is that they need to have proper infrastructure to service their clients, to do whatever they are, trying to do on the market. So what Quadra Trade does is that we build this unified platform that encompasses everything that an institutional client may require to enter the space. So we have a PMS solution, we have an OEMS solution, a collateral management system, risk management system, whatever it may be. We've put a lot of thought and effort to build a platform that has a cohesive product that offers everything that these guys may need whenever they're entering the market.
And these guys being banks, hedge funds,
hedge funds, institutional clients in general. Okay. Now we are getting a wave of interest from companies that you wouldn't think about. Like you have corporate clients that are interested in trading crypto or having ways to monitor how their crypto investments are performing. You have like foundations, VCs that are interacting more and more with market makers in OTC markets. All of these guys, they are seeing now that they require access to proper risk management systems.
So would a market maker be a client of yours as well?
Market makers are our clients. As a matter of fact, we have a few of them using our platform.
Right, so instead of them having to build everything in-house, they can just use yours.
This is absolutely an interesting thing, right? If you are a market maker entering the space, what you tend to do is you should be focusing in how you generate alpha or how you are offering the services that you are, putting yourself there to offer.
Yeah, your day job, basically.
You shouldn't have to spend a lot of time thinking about building an RFQ system or an operational system to communicate and to handle price requests from your clients, all of those things.
Sure.
So this is where a company like Quadra would come in, right? If you're a market maker, you should focus on building your volatility services. You should be focusing on offering
the fun stuff.
Exactly, value-added services. But most of the firms, they tend to spend a lot of time and resources building tech that they perhaps they don't have an edge on, and exactly. So the economies of scale of using a platform or a company like mine are there, and I think that they achieve everything that they are trying to achieve.
Because your background, Pedro, you're an interest rate trader, right?
Yes, it feels like a long time now. But yes, I used to be a third trader. I spent a number of years working here in the UK as well as in the United States. I traded everything from short-term interest rates, FX swaps, cross-currency bases, all of those things. And then at some point, crypto was one of those things that kept on knocking on my door, and I was very stupid in the beginning.
Ignoring it.
I ignored it, and I paid the price. The first time I heard about crypto was in 2013, about Bitcoin, and I And I remember thinking, who is going to be interacting with this? It took me a while to...
Everyone was like, criminals, money laundering.
No, but for me, it was even worse, right? I used to be a market maker. I was in New York, and someone, a friend of mine took me for dinner. And then he was like, look, do you mind after this, we pass by this corner shop because they have the first Bitcoin ATM machine. And I said, Bitcoin ATM machine, what's Bitcoin, right? And then I go there, the price was like $150, something like this. And then the bid offer spread was 100, 300, something ridiculous. And before I could say something to the guy, the guy was putting money there to get a QR code. And I thought that was absurd. Absurd. This thing is never going to work out. What is this? And then it was only around 2017, 2020 where I got serious about it. And then I never looked back. I spent most of the last years that I was working in TradFi studying about Bitcoin, studying about crypto, the innovation, the whole thing about decentralized finance for me was quite, refreshing. And then I tried to figure out how can I get full time into this space. I want to be involved with this. And obviously coming from a TradFi background as a trader, Quadra seemed to be a natural way of doing this. I figured we can actually build something that is better than what we were used to when we were in TradFi. And that's how we started this.
Well, it's good that point you make. I mean, I definitely feel like the platforms that are being built in crypto, Deribit's a prime example, right? If I compare Deribit to the options trading platforms that I can use in TradFi, I mean, there's no contest. The Deribit platform's so much more user-friendly. It's just so much better.
Exactly, yeah.
And then the Vol analytics that I can find out there as well, which cost me nothing, are so much better than anything I'm getting. Unless I've got a Bloomberg terminal, which, give you a clue, retail traders are not going to be paying out $2,500 a month for a Bloomberg terminal.
Yeah, that's exactly how you have an opportunity to rethink and reimagine how these systems should be. And absolutely, you should make them way more intuitive, way more user-friendly. We should prioritize the user experience. So that's why, and to be perfect, the real backstory here is that when I got into crypto the first time, I came in as a trader. Right, I started as a portfolio manager for a family office trading crypto, and when we got in, we were like, all right, let's see what's available out there. Right, let me see. I need some infrastructure. I need some.
Yes, you wanted to buy something off the shelf.
Exactly. The last thing I wanted was to build something, and then that first experience at the time was a little bit shocking. Things have improved massively in recent times, and I think that we are part of this wave. But at the time, was difficult to find this. But nowadays, Deribit's a prime example. It's a great platform. It's a great exchange. And I think that things they have lots to improve still, but we are going the right direction. That's for sure.
So like you said, you were a trader, right? So obviously, whilst you're building out this platform, I imagine you are still a bit of a trader on crypto now, right?
Yeah.
So what are your thoughts about this market?
I think I am the first user of my own product.
User, yeah.
I think that things are getting exciting for a number of reasons, and I think that you guys have been discussing this. They've just made a bunch of points here that are super valid. The curious thing is that if you think about a while back, if you had yields going higher, Bitcoin would behave very differently, right?
Because the dollar would go higher with it.
Exactly.
Right, yeah.
And Bitcoin was perceived as a highly speculative asset. It's still quite volatile, but that volatility is coming lower and lower and lower as the asset matures into something more. And I think that we are getting to a stage now where digital gold is probably the right way to refer about Bitcoin. And people tend to get confused. When you say digital gold, they expect Bitcoin to behave just like gold. It's not exactly the same thing. It's an improved version, is a different version of gold, right? And I think that you have a lot of room to go. I still think that we are early in this adoption curve in terms of institutional clients coming into crypto, but I think that we are getting there, and I think that Bitcoin is going to play a major role in this.
But are you not worried about, like, when I see random companies now all trying to become Bitcoin Treasury holding companies, right? Because Saylor's done so well out of it.
Yeah.
makes me think, oh my God, these are signs of a top. Yeah. That scares me. I mean, does that not worry you when you see that type of headline?
Do I have a concern? Yes, but these concerns, I think that they can be extended to anything, right? I could be concerned about some major exchange or custodian having a problem. The thing is, you do have appetite for pretty much everything there, and these companies, they serve a purpose for certain types of investors, and I think that there is a room for all of these companies. I just hope people are able to evaluate the risks in the right way.
So rather than over-levering themselves and basically blowing up the system, they're trying to do it sensibly.
Yeah, you do have people like buying strategy that perhaps don't fully understand what exactly they are doing, right? So this is a concern for me, and but I think that is natural. I think that you're going to get a lot more of these companies, right? Bitcoin Treasury corporations are here to stay probably, and I think that you're going to have a lot of companies out there that are going to be investing more and more into crypto.
I suppose another way of looking at it as well is like if they're going to end up being on central bank balance sheets, why can't they be on corporate balance sheets, right? So now,
exactly.
not that we've got a wave of central banks all saying they're holding Bitcoin, but it's kind of the direction we're headed. That's where we're headed.
We kind of do, right? So I think that this is the very positive thing that came with the Trump administration. Before we had this very antagonistic way coming from the United States, right, with regulators, with the government. And I think that now there is pretty much things have changed. And now is the opportunity that corporations have, sovereign wealth funds they have, other nation states, to actually embrace Bitcoin, at least Bitcoin for now, and then after that you get probably a whole wave of different digital assets that are set to benefit from this.
I think the worry with all this stuff is, again, like the leverage and how you're sort of funding this stuff. I mean, it kind of obviously it's just really accepted and because government bonds like safe haven to own on the balance sheet, like corporate treasuries and obviously banks would do. And they all piled into that stuff in 2020, which, with hindsight, was kind of silly when rates were pretty much at zero. And it's like all these things. It's not a problem until it's a problem when you have funding issues, as we saw in the regional bank blow up when deposits started to leave. So it's fine. You can, banks are able. They have the pleasure or privilege of being able to hold assets or the government bonds held to maturity, so they don't have to realise the losses on them. They can just hold them for 10 years. But that's fine if you can hold it for 10 years before people go, no, I want my money back. And then you have to start selling those assets.
To give
and I think that's the same with some of these Bitcoin treasuries. And it'll be the same with Saylor, right? It's all fine until he's trying to roll over some of that debt. And then if the demand's there, not to lend to him on that, even if it's zero interest, at some point principal needs repaying. And then if the demand's not there for whatever reason, and then he's going, oh shit, I've got to sell some of this Bitcoin now, and then it's going to be. But I think the other thing is when I have conversations around this is, again, it feels frightening because the pace that all of this is moving, and we're seeing more and more of these treasury businesses and corporate treasuries wanting to sort of stick Bitcoin on the balance sheet. But we come from a place of zero, and it's still there's still a very limited number of treasuries doing it. So it kind of feels scary because people going from zero, and those that are getting into it are kind of going, right, we want to be in it. But it's also at the same time, I'm like, it's still such a small percentage of anyone's balance sheet. So I think it's the one that we're all nervous about. I think you said about, maybe it's not the retail sort of leverage, it's now all the corporates that are FOMOing in.
Yeah, because retail all went into like alts and memes and stuff, because that's where the 100x opportunities maybe lie. Yeah. But now it kind of feels like the corporates are all FOMOing into Bitcoin, because like Saylor's out there in the limelight looking like a genius, and they're like, oh, we want a bit of that action. We've got a treasury, it's not doing that well, dollar's going down in value, so.
And the other thing is, I think retail, they tend to look at previous cycles and they think that that's a playbook, right? And whenever you had a bull run in Bitcoin out, they would totally outperform. And retail has been kind of sidelined in this whole thing, right? Because they did try to get the 100x that never materialized.
They kind of left Bitcoin
exactly,
alone.
And I think that a lot of crypto native funds also suffered a lot, right? This is the most hated rally in Bitcoin ever, right? Because any company that uses Bitcoin as a benchmark for their outperformance or performance fees, they are
rubbish.
like, how are they getting this outperformance? Generally, they are trying to build a portfolio of outs that they think that's going to outperform, and that hasn't been the case for many people.
Last month it was, though. Ethereum came alive. Is that something you
probably
expect?
when everybody sold their Ethereum, and then the capitulation came, and
is that something you expect to continue?
I think that Ethereum has the narrative has been so negative, but I don't think that is right. I actually think that what they've done is to build. With their roadmap, even the decisions of using layer 2s for rollups and all of those things, they've built a lot of capacity into this massive decentralized platform, right? Ecosystem. And the demand is still to come, right? But it's coming, right? When you have people like BlackRock building on Ethereum, when you have all the major payment companies in TradFi all building on Ethereum, this is going to come.
That's
and the moment that it comes, I think that then you realize the value. And I don't think that there is any other blockchain there that is quite like Ethereum, right? We had an issue recently where there was a hack in Sui, and they froze the funds, right? So there is a bunch of things that happen that make you realize that perhaps things are not as decentralized as they claim to be. And Ethereum is one of these companies, one of these blockchains that have been there with 10 years of uptime, release after release. Everything has been really, really well executed aside from their communication strategy. So I think that when everything, if they manage to get that part fixed, I think that there is a lot of interesting things. The other thing that people always criticize about Ethereum is because you have all these layer 2s, interoperability is not really great. The user experience is not really great, right? If I'm in Arbitrum and then I need to do something in another layer 2, things don't flow in a cohesive way. But this is exactly what's in the roadmap for 2026. Is the priority for the Ethereum Foundation right now to actually make all of these things happen. And if their track record is anything to look to, I think that there is a very good chance that they will actually deliver on this as well. And then you end up with something that is highly scalable and with a great user experience. And then there will be no other chain that does exactly the same thing as Ethereum. I'm an Ethereum bull.
Okay.
Yeah.
Interesting.
It's interesting as well to me, probably the biggest kind of story out of crypto for the last few years has been like stable coins and obviously like with Tether and just that being the thing that's had real product market fit. And just the explosion. I mean, it's still hard to get my head around the fact that Tether, are one of the biggest holders of treasuries out there. It's just like phenomenal, and the role that they're going to play in the global financial system. It is phenomenal. And again, when I sort of say to people, particularly people I know have just always bared up on ETH, I go, obviously most stablecoin transactions settle on ETH, and but and it's like, again, it's still the network that all the activities on, and that could change. Okay, that could change, and there's other contenders, but network effects are still a massively important part of crypto and what drives valuations, and it's still capturing the lion's share of all activity on chain. So I'm in the same camp.
It is interesting how they decoupled all the L2's activity from ETH, right? There is a relationship, right? They are connected, and I think that when you look at the combined effect of ETH and all of the L2s built on top of it, I think that there is no second player that comes anywhere closer to that, right?
Quite
and
bullish.
you have other chains that are, that have a lot of volumes. Solana is a perfect example, but you see the transactions on the background. There is a lot of meme coin trading, which is all valid. There is a place for that, but it's not exactly, Visa is not using that yet for some, payments solution that they are building.
Yeah.
So I think that this is what people need to look at: the quality of the companies that are coming and adopting certain blockchains over others.
I think as well, like something I always say, I know we've had this conversation before, like price is narrative as well on these things. So ETH price hasn't really gone anywhere for a few years. Someone was saying earlier, it's like store of value. It's been 2,600 or whatever for the last few years, but. And everyone gets frustrated, and then everyone's beating each other up on Twitter and saying this is dead, the chain's dead, even though activity on the chain is absolutely not dead. But then as soon as things start to move, like already people going, maybe it's the Petra upgrade that's now really starting to sort of see ETH outperform, and then there'll be everyone will start to actually look at some of the positive developments that are going on. Just because price is pumping, and then that'll be everyone. And then it's all about ETH, and everyone's on ETH again.
We need to say that the narrative in crypto is like psychotic, right? It changes like that.
Yeah.
So it doesn't take much. We used to talk about this all the time, right? The Vol in crypto is like no other asset in the world.
I wanted to talk to you about that, right? Because Ethereum Vols trading quite expensive relative to Bitcoin, right? There was a time where it was trading under Bitcoin Vol, which is a bit unheard of. But now it's been creeping up, and it's been creeping up because it's justified. Ethereum's realizing, anywhere between 30 and 50 vols over. But right now, the front end's at like 30, but the back end's even stretching towards 20. So I'm looking at September vol. That's not really back end, but it's kind of midterm. Looking at September vol spread between Ethereum and Bitcoin near 20 vols. That looks like a sell to me if I've ever seen one, right?
Yeah.
Because, you're not selling too much gamma because you're out to September. You're also selling vols that are quite high, so there's automatically less gamma anyway. And, if we were to go through a period of a couple of months where cryptos just kind of go sideways, I could see that easily going back to like 10 vols, right? So it feels like a trade to me, that one.
It sounds like it. And especially because we are coming out of this massive rally that we had in ETH, it's probably the right time to do something like this. Yeah. Right. You play the mean reversion, you capture some premium there, and definitely, it sounds like a decent idea. Cool. And you can see this play out as well, right? This is exactly the kind of stuff that people are doing in the space.
That's a typical hedge fund trade, really. Yeah.
Imran, I don't want to embarrass you and make you take a victory lap.
Yes, you do.
Or maybe a little bit, but and take a victory lap. You put out an interesting post today on a trade that we discussed on here, on your sort of how you were playing the Bitcoin move with a 1x3 sort of call spread. Talk to us about that, how that's performed. And you made some really interesting points about now managing the risk around that.
Sure, yeah. I mean, these are trades I quite like doing generally. Like, I'm obviously a Bitcoin bull. Everyone kind of knows that, right? But
you have to be sat next to me.
Yeah, well, I have to, exactly. But then every time we dip, whenever we have these dips, obviously it's not like I'm going to go and leverage myself and buy loads more, right? And then risk getting liquidated, right? So the way I top up my exposure is by putting on relatively low premium upside trades that are these call ratios, because what normally happens is the vol's quite elevated, so you can pick strikes that are quite far out of the money. You can be long like a 30 delta call. You can be short 3 10 delta calls against it. The net delta of the structure is 0, right? The net premium of the structure is pretty low. But if then in the subsequent month or two, depending on which expiry you've picked, if you do get a move higher, there's a very high probability that very low premium spend multiplies quite a bit, right? And you make some decent money. So it's like, I think when I did the trade, it was 22nd of April, cost about $500. We had mentioned it on the show. I think that those are the sort of trades that I liked at the time.
What were the strikes back then that you?
It was the 100k and the 115k. So I bought one of the 100k calls in May expiry and sold 3 of the 115k calls, same expiry, right? And that cost me like $500 equivalent, basically, right? So then now we're up here, we're a few days away from expiry, and we're sitting kind of in the middle or even above the middle, this thing's exploded in value because those 115s have decayed to zero, the 100s have gone in the money. But, you know, we had the news over on Friday of the tariffs potentially coming back on Europe. Market had a bit of a wobble. Bond market's looking a bit shaky. So I'm looking at it. I've made 12x on my premium. And yes, it can make more money. But is there a smarter way to risk manage this and maintain some upside, but bank some of the money? So then you can do various things like, and I put it on Twitter where I explain in detail what I did. But I rolled the long strike up to 110k, and I started buying back some of the 115s. So that basically monetizes a load of the intrinsic value of the 100ks. So you've banked like from a $500 spend, you bank like $5,000 of profit. That's job done.
10x in the bag.
Yeah, 10x in the bag, and then you've still got another trade between now and Friday that could make you another $5,000 if you get lucky. Pump. But you don't really lose much if it comes down again, basically, right? So that's the idea. Yeah, that worked out well, that one.
Yeah. What do you use? What's your phrase? Altcoin-like returns. Yeah.
You don't have to trade altcoins.
I love this.
Just stick with the main names. If you learn how to use options, you can get altcoin-type returns, right? So,
and I think it all comes down to learning a little bit more about, you know, derivatives trading and having the tools as well to do these things. And I totally agree with you. It's a great way to get that altcoin return playing with Bitcoin and Ethereum.
Yeah, I want to ask you a little bit about the basis trade, right? Because it's not a trade that I've done in any meaningful size myself, but I know that in your platform, it's designed so that people can trade that trade quite granularly, right? And like in size, and move their collateral around and stuff like that. So recently we did see funding rates blow out a bit on the rally, right? Funding rates went from like 4-5% to like 8%. I'm not sure where they are today, but then the perp funding blew out as well, right?
Yeah, there are so many interesting dynamics in the whole thing.
But the question I want to ask about the perp funding though, before you answer, is so it looks really attractive to go and sell the hell out of that funding at 8% or whatever, right? Okay. But to sell the funding at 8% in the futures, you have to be long the perps against it, essentially, right? If you're levering yourself up, right? You're long the perps and short the future to try and capture that. But every day that perp is bleeding you theta because it's trading at that high rate. So what do you do about that?
That's the interesting thing, right? Everybody thinks about the basis trade this way, right? And I think that the traditional basis trades, long spot, short the future, makes a lot of sense.
Yeah, because you're not levered.
Exactly.
And you're not paying funding.
You can achieve leverage in different ways, right? If you have access to, to stable coins, or if you can borrow money, paying the risk-free rates, like some of the banks that we know of can do that and deploy the capital, you can buy Bitcoin and sell the future. But then the other way around, that you are trying to achieve leverage, that is to buy Perpetual and sell the quarterly futures. Yeah. It's crazy. In my experience, hardly ever you will make money that way. Okay. Right? Because the funding on the perpetual swaps will eat you alive. They will kill you. Okay. And generally speaking, you do have some very interesting dynamics, right? So the formulas that the exchanges they use to calculate the perpetual funding, they vary sometimes. And there is this mean reversion that they tend to default into 1 to 3 basis points in a neutral state every day, right? Mm-hmm. So it's always positive. If you're doing 3 basis points a day, that annualizes 10% a year, right? So you don't want to have that position, right? And in some cases, the interesting thing is that it reminds me a lot about trading FX swaps, right? When you have like your overnight funding versus what you're paying for a month a swap. And it's very similar in crypto. And the interesting thing that sometimes it makes sense to do the opposite. You are going to be short the perpetual, you're going to have a negative carry trades where you are long the future
which
and
is
short the
expensive.
Exactly, because the realize on the perpetual is a dangerous trade, because if there is a market correction, that spreads, it collapses very quickly. quickly and the funding on the Perpetual disappears.
Okay.
But on several occasions, you can make a lot of money by doing just that.
Yeah, it's an interesting one because I've been playing around with it in tiny size on Deribit, just to test it, and I was like, this perp's a bit painful. Why is this perp not me reverting back to zero?
Yeah,
right?
and you have that realized P&L.
Yeah,
that is the funding.
And you're waiting,
when it happens,
and you're waiting for the decay on the basis.
Maybe is a little bit trickier than most people think, and that's why it's interesting for people to like. If you use a platform like ours, you can actually evaluate what is the funding rates on every single platform that you are interacting with.
Right.
So you get other interesting situations, right? The perpetual funding is a function as well of supply and demand on different exchanges. So you do get situations where one exchange will have a funding that is like 20% annualized versus another exchange that is zero. So there is an opportunity there for some of the firms that we work with, and they exploit this to actually do the cross-exchange arbitrage, the perpetual funding arbitrage.
You need good collateral management for that.
You need great collateral management for that. You need to have execution systems that actually allow you to execute those trades in a way that makes sense, because the execution cost there could easily eat up any potential gain that you may get from this, right? So you do need to have these tools. But institutional clients, these crypto trading firms, they have access to those, so they are able to exploit this, and it ends up being a great thing because you end up providing liquidity across the markets. You reduce the arbitrage opportunities in certain places. You make sure that liquidity goes to the exchanges sometimes that don't have much liquidity. So it ends up being a win-win situation for everybody.
Last thing before we go, I want to ask you about was this kind of supply of crypto vol that seems to be kind of suppressing the market. We know the market's maturing. That's a good thing. Generally, when that happens, things become less volatile, right? But talk to me a bit about this these foundations and the altcoin supply that comes from them. Something we talked with a few of our guests in Dubai about, and I think you had some good insights there.
I have a theory based on some empirical evidence or conversations that I've had with a bunch of people, right?
Yeah.
I think that crypto is evolving, the market is evolving, and you have a lot of stuff that we see in TradFi, right? When investment bankers go to a corporate client and they say, look, you're sitting on an inventory of assets. Why don't we transform these assets in a productive asset?
Earn some yield, basically.
Exactly. How can you generate yields from your inventory?
Because you're sitting on billions of dollars worth of this stuff.
And how do they do this? They do this by selling covered calls or structures that resemble a covered call strategy. So you do have in crypto, you don't have enough liquidity on the exchanges for the foundations, the VCs that are sitting on a lot of inventory should go to an exchange and say, all right, I want to sell some covered calls on this altcoin.
In 5 yards.
There is no liquidity to do on an exchange traded basis. And there are so many assets out there that it's impossible to do this. Okay. And then here comes the OTC market makers. They do have the expertise.
We spoke to some of those guys, right?
Yeah, they do have the expertise. They do have the tools and this is their business model. They go to these foundations, they go to these VCs and say, let us help you transform this inventory in a productive asset. Yeah. And they do this by pitching these ideas. So they end up buying calls from these foundations on outs that tend to be
in massive size,
way more volatile, right? And they realize this is much higher there, and they are long Vega on those and Gamma in some cases.
So when we say realize much higher, what is it like? Three times Bitcoin vol?
Well,
like that?
I always think in terms of, I like to think volatility is a function of the market cap of the assets to some extent.
Yeah,
right?
Inversely proportional.
Exactly. And that's exactly what we're seeing with Bitcoin. The volatility is going lower, the bigger the market cap is. And it seems to make sense. So these outs that are not even, in some cases trading on the major exchanges, there is a potential there for a lot of volatility.
Okay.
So they buy those calls from the foundations, from
And they delta hedge
VCs,
them.
and they need to hedge something. They delta hedge,
Yeah.
and they also need to hedge an element of the volatility. And the way that they do this is by going into the core tokens, right? Bitcoin, Ethereum, Solana, where they can hedge that, and they use those curves actually to build their
their Vols
surfaces for
surface. Yeah.
exactly.
Yeah.
So in my mind, there is always going, and this market is growing a lot. There is a lot of firms operating single dealer platforms, selling this kind of services to foundations and VCs and all of these clients. So they are actively buying this VOL, and then they go to the major tokens and they are selling those VOLs and to hedge some of their exposure.
Yeah, so that's what's creating a lot of the supply.
I think it's part of the reason. I think that is potentially a big part based on some of the conversations that I'm having.
Intuitively, it makes sense. Yeah, interesting.
And they must be making quite a lot of money out of that trade because they're probably showing quite low ball bids for that vol, right?
Well, it's something that doesn't have much price transparency, right? I think that you have a lot of price transparency when you are interacting with an exchange like Deribit. When you are interacting with market makers on single dealer platforms, perhaps you, as a foundation, and they are not professional trading firms, right? VCs, they are not necessarily a professional trading firm.
Sure.
So they are like, all right, okay, great. You give me how many percent yield on these covered calls? Oh, fantastic. Let's trade this.
And then I don't have to worry about it.
And I don't have to worry about exactly.
Yeah.
So this probably happens quite a bit, but I think that's part of this evolution where we are. You used to have a lot of this in TradFi. And then there were a wave of regulatory changes where price transparency and disclosures, they became the norm. In TradFi, you have lots of multi-dealer platforms, right, where people can actually send an RFQ to multiple different market makers.
Yeah, they keep each other honest, don't they?
Exactly. We are not there yet with crypto, but I think that we are going that direction.
We're heading there. All right, mate. It's been a pleasure to have you on the show.
This is super exciting for me. It was a pleasure. Thank you very much for having me.
No, really good to have you on. Thank you.
All right, guys.
Thank you.
We'll call it a day. Remember, like and subscribe so we can get more people like Pedro on the show. I'll catch you back here again next week. Cheers.